Intel just released their latest quarterly figures. Horrible quarter. I'll just start with the truth. Horrible quarter, bad guidance as well. Stock is down 14% or so at the time of making this video. We'll have a market cap closer to $100 billion. You're seeing here dividend yield. There's no dividend anymore after the fourth quarter. They are suspending the dividend. To be honest, they should have never reinstated the dividend after they suspended it the first time. Why waste that amount of money if you can use it for, well, jobs? Don't pay a dividend. Don't get paid millions in compensation each and every year. Don't cut the jobs that you're going to cut right now. Tens of thousands of people will lose their jobs. Total restructuring for the company that will save them billions of dollars in 24 and 25, which of course for the long-term future of the company, it's bullish. But in the short run, still a lot of pain for Intel. So the question here is, time to cut Intel loose or time to double down or not do anything? Let me know down in the comment section below. We're going to go over everything in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if not. The next one will probably be about Amazon, then Block Square, and then a Mercado Libre. So stay tuned for all of that. Make sure you have that notification bell on so you don't miss any videos. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's start with the cost reduction plan. The plan will enable the next phase of the company's multi-year transformation strategy and is focused on 4 key priorities. 1. Reducing operating expenses. The company will streamline its operations and meaningfully cut spending and headcount, reducing non-GAAP R&D and marketing, general and administrative to approximately $20 billion in 2024 and approximately $17.5 billion in 2025, with further reductions expected in 2026. Intel expects to reduce headcount by greater than 15%, with the majority completed by the end of 2024. Number 2, reducing capital expenditures. With the end of its historic 5 nodes in 4 years journey firmly in sight, Intel is now shifting its focus towards capital efficiency and investment levels aligned to market requirements. This will reduce gross capital expenditures in 2024 by more than 20% from prior projections, bringing gross capital expenditures in 2024 to between $25 to $27 billion. Intel expects net capital spending in 2024 of between $11 to $13 billion. In 2025, the company is targeting gross capex between $20 to $23 billion and net capital spending between $12 to $14 billion. Third, reducing cost of sales. The company expects to generate $1 billion in saving in non-variable costs of sales in 2025. Product mix will continue to be a headwind next year, contributing to modest year-over-year improvements to 2025's gross margin. The 4 points is basically them repeating again that they're focused on their mission, growing, etc., etc. And so let's start with the presentation. Again, they talk about the 4 nodes in 5 years, line in sight. So of course, the majority of the major investments are behind us. Now let's wait and see what they can do with all that investment. For Q2, revenue came in at $12.8 billion. That's down 1% year over year, in line with updated May outlook, which again is not great. Gross margin non-GAAP 38.7%, down 1 percentage points year over year and 4.8 percentage points below April outlook. As for EPS non-GAAP, 2 cents, down 11 cents year over year and 8 cents below April outlook. So again, not great at all. Especially since, well, in April, we were talking about this and we're saying, okay, maybe guidance is low, maybe they're sandbagging, but clearly that was not the case. As for these segments, so CCG, DCAI, and Next, CCG revenue came in at $7.4 billion, operating margin of 33.7%, and operating income of 2.5%. Again, not great at all. They do say here that AI PCs is exceeding expectations on path to over 4 million units shipped in 2024. Lunar Lake delivered ahead of schedule with 60% battery life. This is the part of the business where I do expect to see some better things in the second half of the year. But yeah, let's see what happens. With regards to the DCI data center, their revenue flat quarter over quarter, $3 billion, operating income down, so basically $300 million, and operating margin of 9.1%. This year, Sierra Forest in volume production and lead vehicle on Intel 3, Granite Rapids and Gaudi 3 ramping in the second half of 2024. As for next, nothing much has changed. Revenue 1.3 billion, operating margin 10.3%, and operating income $100 million. As for Intel Foundry, still losing quite a lot of money there. Operating income, loss $2.8 billion with negative operating margin of 65.5%. Revenue was $4.3 billion. They say they released Intel 18A PDK 1.0, ramping volume production in the first half of 2025. Intel 14A and Intel 10A development underway utilizing High-NA UAV, of course, from ASML, building sustainable supply chain in the United States and around the world. Again, all the investment that they've been making for Intel Foundry have hit the company's fundamentals, of course, but we're yet to see how much money they can make from it. As for Altera, quarter over quarter, small improvements there, $361 million in revenue, operating margin negative 6.9%, operating income loss $25 million, working towards capitalizing the business on a path to IPO in coming years. With regards to Mobileye, improvements there, $440 million in revenue, 16.4% operating margin, operating income of just $72 million. And so as for the outlook, which was of course a miss across the board, revenue between $12.5 and $13.5 billion, that's down $1.2 billion year over year. Gross margin non-GAAP 38%, down 7.8 percentage points year over year. And EPS loss here non-GAAP 3 cents, down 44 cents year over year. So again, truly horrendous. Ending here with a comment from Pat and from the CFO. So our Q2 financial performance was disappointing, even as we hit key product and process technology milestones. Second half trends are more challenging than we previously expected, and we are leveraging our new operating model to take decisive actions that will improve operating and capital efficiencies while accelerating our IDM 2.0 transformation. These actions, combined with the launch of Intel 18A next year to regain process technology leadership, will strengthen our position in the market, improve our profitability, and create shareholder value. As for the CFO, second quarter results were impacted by gross margin headwinds from the accelerated ramp of our AI PC product, higher than typical charges related to non-core businesses, and the impact from unused capacity. By implementing our spending reductions, we are taking proactive steps to improve our profits and strengthen our balance sheet. We expect these actions to meaningfully improve liquidity and reduce our debt balance while enabling us to make the right investment to drive long-term value for shareholders. Again, this is not the first time that they're trying to optimize the business. So to me, this is a missed, let's say, not missed opportunity, but they missed the ball here, because they could have done this a year ago, a year and a half ago, where they already announced some new, let's say, cost cuts types of programs, and yet it did not work. And so looking at the stock right now, $24. That's something not seen since February 2014. That's quite crazy. And of course, you will say, oh, that doesn't make much sense. No, it does not make much sense. But then again, in 2014, Intel was by far the leader. AMD was nowhere to be seen, very close to bankruptcy actually. Nvidia was also not as big as today. So Intel 2014 at $24 was technically a stronger and better company than it is today. Now, I fully expect Intel to become a much bigger company in the future, but to be honest, what I'm seeing right now is definitely not, a reason for me to start adding way more to my position, because there are still a lot of unknowns. Of course, with the after hours action, the stock will be extremely oversold, but like we've seen in the past, it can stay oversold for a while. So yeah, that's my plan right now. I don't really expect to add much more to my position. If I hear something spectacular, better than the dumpster fire that we're seeing right now during the earnings call, then maybe I will add a little bit just to reduce my average. But other than that, I rather stay patient, not lose more money on my position, and add only when I actually see some positive results in the coming quarters, which I don't think will happen this year. So yes, I can understand people that say, look, I've wasted enough time with Intel, better opportunities out there, buy Nvidia after the dip, buy Qualcomm, AMD, even AMD right now. So I can understand for those that have patience, let's say, or are willing to wait another year or so until you see Intel's performance. Then yeah, patience is key with this one. I'm truly disappointed because I did think that things would get a little bit better, but no, they kept getting a little bit better, but then way worse a quarter or two after. I still think that Pat is the right man to take Intel forward. I know a lot of people think he's not the right man, but Intel is in the position it is today, not because of Pat, because of previous management that completely missed the ball on what's going to happen next. They were buying back a lot of shares of an expensive stock, they were paying a dividend, and they were not investing in the future of Intel, which is how AMD caught up to them, became bigger and bigger. They completely missed the data center AI thing. So yeah, that's basically what's happening right now. Do share your thoughts down in the comment section below, and I'll see you all in the next videos. Bye bye.